Hi, Saen Higgins here. What happens to a tax lien on foreclosed properties? This is a great question, and we're going to cover that in depth in this video. Not only will we show you what happens with the tax lien certificates, on how you can actually profit from all of this, and really at the end of the day, that's what this is all about. How can we make, like I've said before, lemons out of lemonade? So we'll walk through all of that through this video. And here's the great thing about it. Not only are we going to show you how this whole works, but we're going to show you actually how to make money while you're doing this. So stick around to the very end. And what I'll do is I'll show you how to turn a tax lien on a foreclosed property into huge profit. So stick around, we'll cover all that. So what really happens to a property when it goes into foreclosure that has a tax lien certificate on it? That's a great question. And we're going to cover all of that in here. Now here's the great thing about it. Okay, not only can we make lemonade into lemons, but we can make lemon into lemonade. Okay, just so we get it right this time. Bottom line is this, is how can you make a situation that tentatively could be a little precarious and you're like, wait a second, I can make some money on this? So there are possibilities in there that can make you a lot of money, but you need to pay attention to this video. In fact, I'll do this. The very end, I'll show you exactly how you take a property that has a tax lien into it and turn it into a profit situation for you and your family. So stick around for that. And listen, if you got some questions, type it in there. I answer all the questions in the comment section inside there. Also, if you have any other likes or interest about what I'm doing out here, this helps the algorithm. To say, hey, Saen, I want you to talk about this, and put it in there, and I'll do that. Start some dialogue with some of the other people in the chat section in there, and we can start a little tribe, if you will. All right, so let's get started with it. What happens to a tax lien certificate on a property that's being foreclosed on? Okay, there's two different things here, okay? So a foreclosure on a property typically is from a lien or encumbrance that has failed to meet its obligation. So there is a contract. A typical one that a lot of people understand is obviously a bank. So somebody took a loan out from a bank and they're not fulfilling on that obligation. The bank says enough's enough. So the bank sits there and says, we've got to go into a foreclosure mechanism. They really don't care about the tax lien on the property, kind of. Because if you think about it, a tax lien certificate on a property really doesn't do anything until the redemption period is starting to expire. So I could have a tax lien on a property, it could go into foreclosure, and they could actually sell it at foreclosure. If somebody doesn't come in to satisfy these taxes to the county, remember, if I own a tax lien on a property, I don't really own the property. I don't have to maintain the property. I don't have to do anything. I just have I've taken the county's position of their lien on the property. The only difference is, and I just sit there, I just hang out. So they could foreclose on this property. They could not even satisfy this tax lien on the property tax lien on there, and nothing will happen as long as the redemption period still has time on it. So let's look at a couple of different scenarios. Let's say I buy a tax lien on a property and the bank comes in and forecloses. Now, if the bank was smart and they did it correctly, they would see that there is a tax lien on the property and they would satisfy that before proceeding forward, because they foreclose on the property, they sell it. But not all the time. They could still sell the property. The county is going to be like, you guys can do whatever you want. The county is technically owed the property. So this new buyer over here will not get clear title until they satisfy the delinquent property taxes on the property. Think of it this way. The county is owed the money, not you, even though you have the lien on the property. The county's owed the money, and the county technically controls the title on the property. Y'all can do whatever you want, is what they're saying. But at the end of the day, if the expiration period ends on this tax lien and y'all haven't redeemed us at the county, this person or us, whoever owns the tax lien, can proceed with their own foreclosure, thus wiping out the other property owner. So as you can see, if you have a foreclosure situation that goes on to a property that currently has a tax lien, whether it's yours or not, doesn't really matter. It's irrelevant. Okay? It doesn't mean really anything. Now, if somebody is foreclosing the property for a bank loan or second loan or whatever that is, they should be able to see that there's a tax lien on the property. It's all public information. And they've got one of two choices. They can either satisfy that lien to bring it up for a clean sale, or they can just say, hey, we're selling it with all liens and encumbrances. It would be upon the new owner of the property during the foreclosure process to go ahead and satisfy those delinquent property taxes, because otherwise nobody's going to get clear title. I think of it this way. If you go to buy a property at just a regular conventional purchase price, they bring the taxes up to the day of the sale. Like the property taxes are paid to the penny of how much is owed on that. Now it's your responsibility as the new owner to pay. Now everybody's got clear title. But if somebody buys a property during foreclosure, there's going to be a mess. So not only do they buy the property through foreclosure, they've got to get a title company to come in and clean up all the old encumbrances on that. Because a foreclosure from the bank does not eliminate other liens and encumbrances. No. The only one that does that is through a property tax sale. So if this person buys a property during the foreclosure process, okay, and there's still a tax lien on the property, the only way that goes away is if it's satisfied. So make no mistake about it. If they don't pay that, and that redemption period, the time period is up, and say it's my lien, and I go to foreclose, I will wipe out any liens and encumbrances. This is how powerful tax liens and tax deeds are. From time to time, as you get into this, as I've seen back east especially, where you've got these properties with several hundred years of liens and what have you on the property. What the county will do sometimes is they will say the best way to clear title on a property is literally bring it up to sale. I've seen this not but a handful of times, but I've seen this where the county said, hey, nobody bid on this property. The family is trying to clear title on this. This is a family matter. And everybody will politely not do it. They say they bring it up for a tax sale. They say sold, which allows that person to clear title on that because nothing's going to survive a tax lien sale. Unlike a foreclosure sale where almost everything survives it. They're saying, hey, you're buying it as is. In other words, all liens and encumbrances are still staying with the property. Whereas if I go into a tax lien sale, property tax lien sale, I'm going to eliminate everything on that, okay? Including an IRS tax lien on this. I mean, I think about this. The IRS is the only one out there that universally, I do believe it's 120 days they get. So if I foreclose on a property due to delinquent property taxes, I notify everybody, including the IRS, but the IRS gets 120 days. If the IRS doesn't come in within 120 days, again, no ambiguity there. Their position is wiped out and no longer valid on that property. There's just is no gray area when it comes to this. This is the only mechanism that the county has to ensure that they get paid their property taxes, which will take care of things like, schools, roads, bridges, fire departments, all of those things that make the United States infrastructure superior to most countries out there. And if anybody's ever traveled overseas or done anything like that, you can know what I'm talking about. You go to these places out there that don't have a good infrastructure of property taxes, you're going to see some pretty poor infrastructure as a whole. Like stopping is questionable at intersections, potholes are not fixed, etc. Education system isn't put in place. A number of things can happen. That's the upside of taxes on properties. Now, the nice thing about it is if I'm foreclosing on a property, being aware of tax lien certificates and their superior power on it doesn't really mean anything. It just means that, look, if I want to issue clear title on this property, somebody's going to have to pay those people off. Or I can go in there if nobody's purchased the tax liens and I can purchase those. Now I become the person with the power to go ahead and foreclose on the property. So we've talked about several things throughout this video, okay? First of all, what happens when a foreclosure on a property to the tax lien on the property? Really nothing, unless the foreclosee forecloses on that property and pays off the tax lien during that whole process. So it's really kind of a case-by-case situation. So listen, there is a lot that you need to know this. The best way to proceed forward and how to capitalize on every single one of these, where the tax lien is, how to make money, what's the interest rate, what's the redemption period, all of that is I've got a free course. I just put it together. All you have to do is click the link down below. HigginsMethod.com. It's my gift to you. I literally will methodically go through the same process on exactly how you do this, so you'll know exactly how you and your family can profit from tax liens and tax deed certificates. This is Saen Higgins saying good luck, and we'll see you on the other side.